In this video, I'll show you the easiest way that I think you can be prepared for every single trading day. It all starts with doing your homework after the market closes. I'm on Pacific time, so as soon as the market closes at 1 p.m. Pacific, I get to work. What I'm looking at is the following. What happened in the broader market? What happened in the sectors? And with that, where do we have some individual top holdings giving us some exciting opportunities for the next trading day? I make all of this research available for our Volatility Box members and our Opening Range Breakout members. So each of you has access to this daily brief with setups designed for that particular platform. Now here's the process that I follow for each platform, and it takes a decent amount of time. So I want to walk you through it so you understand what's actually happening underneath the hood. I start first with understanding what's happening with the broader index markets. This, I'm looking at the S&P 500, the Nasdaq, the Dow Jones, and the Russell. And I'm looking for all sorts of clues around the trend. Now, currently, all four of these index markets are bearish. So very clearly, market right now is in this stage of deceleration. That tells me, okay, I need to figure out which sectors I can focus on where I can be in line with this broader market trend, aka more of a bearish sentiment. So in terms of a bullish sentiment, there's only one place I can find that right now, and that's energy. So we look at which sectors then are weakening, which sectors are facing pressure, and which sectors might be extended. I make it very clear here, you want to focus on setups in the weakening sectors first. This is where you can find some really nice opportunities where you risk one to make two, risk one to make three, or even more, because you're joining in the direction of the trend with the sector on your side. The second place that you might find opportunities are the pressured and the washed out list, or these sectors rather, because these are sectors with still a bearish bias, but now you need to put on your creative hat. Pressured, we want to look at things like momentum entries to the downside. We want to see this pressure continue to keep building. Washed out sectors are ones in which the trend is a little bit exhausted. For example, take a look at consumer discretionary. For 31 days, this trend has been bearish. Likely means it needs a bit of a breather. However, if you have been trading for any bit of time, you know that when breathers kick in, that typical first set of top holdings who try to lead the way here to the bullish side, they get smacked straight down by all of the investors still short, all of the institution money still out of this particular holding or fund. So that first little rally fails. So I make a note of that. I look for stocks in which we might be seeing a little bit of initial strength in a weak sector where we can fade that strength in the direction of the overall sector trend and maybe even that holding trend. So lots of clues I put together to then give us these setups. And I try to make it very easy for you as a trader to not only have this list ready to go, but you know what symbols you're looking at and exactly what the setup is and the why. So if we take a look at yesterday's bullish setups, we had one bullish setup which was inside of BTU. Why BTU? Well, that trend went from bearish to bullish, and we had our daily models here, which were backtesting well, 78% win rate. Now, BTU did not trigger today. How do we know that? We don't see the check mark here, nor did it appear on our live scanner. Let's take a look at the bearish setups. We know that the market has this bearish bias. That's, of course, where we would find more setups. We had 9 total bearish setups yesterday, and 7 out of those 9 triggered today. Out of them, we had Broadcom, that didn't trigger. McDonald's, this triggered. McDonald's, both the daily and the hourly models triggered. I'll show you that setup in just a second. Then we had Merck, this did not trigger. Abbott did not trigger. FedEx triggered. Union Pacific triggered. VICI triggered. Mosaic triggered. And Dominion Energy triggered. So 7 out of the 9 stocks which triggered today where I thought we had a decent edge. Now let's take a look at the setup in McDonald's so I can show you what this edge actually looks like. McDonald's stood out for me for a handful of reasons. 1, a bearish trend reversal just triggered. 2, we're going against a weak consumer discretionary trend. Remember what I told you about trying to fade trends that are already weak but might have that initial burst? McDonald's, really good example of that. Then we bring in our back test with our volatility box models. The hourly models are hitting a 79% win rate across the past 14 trades, and the daily models are hitting 64% across 14 trades, and that's with an ORB confluence. And all that means is if we've hit our opening range breakout second targets, and this overlaps nicely with our volatility box ranges, fade that price because that's a really nice place to get short. So that's the setup in McDonald's. And just like that, each setup I add a bit of description. Now let's take a look at our charts to see how this actually looked real time. So McDonald's, remember, we were looking for a short side entry. Why were we looking for a short side entry? Well, if we come into our daily time frame chart, we see that we had a trend reversal to the downside. So again, we're trading in the direction of McDonald's trend. Take a look at XLY, still a bearish trend, but one that is very clearly exhausted. And we're looking now to get involved in stocks in which either we're joining this trend or say McDonald's had tried to come up and rally with the green market pulse. I would be looking right there to fade this trend, especially if it was right into previous resistance levels. Now today we were joining the trend, which made this an even nicer setup. McDonald's hit our volatility box models when we breached the short side zones once and twice here, where we made even a new slightly higher high before seeing sellers really kick into gear. Very simple setup that we're looking at. Price needs to hit our volatility box models, that's step one. And step two, we need to see the edge signal. That tells us we're officially now, in this case, in overbought territory, looking to fade price. If you're a swing trader, a little bit more cautious, just change your time frame. Come into something like the 5-minute, and that allows you to be a little bit broader in terms of your zoom, see when momentum switches much easier, and get involved when you're at the edge of the volatility box models once you have this momentum shift. I hope you found this video helpful in understanding how to use this daily brief. We put a lot of work into this daily brief every single day, and the whole idea here is to help you see exactly what I'm looking at in the markets as well. Where am I looking at for bullish setups? Where am I looking at for bearish setups? And this way we can be prepared instead of being caught off guard whenever the live scanner is hitting the markets, especially when we have volatile days like yesterday. Take care, everyone. Good luck trading, and I'll see you in our next update.